It may come as no surprise that many individuals struggle financially. Whether it be due to poor money management or insufficient income, the statistics are worth paying attention to in order to avoid falling into the same predicament. Welcome to Budget Boosters, where we make finance simple and easy to understand. Our goal is to provide you with easy finance tips to help you improve your financial future. Whether you're interested in personal finance, investing, or just wanted to learn more about money, make sure to subscribe to our channel and hit the like button if you found this video helpful. Let's work together to boost your budget and take control of your financial future. Credit card use can often lead to overspending and financial instability. Research has shown that consumers tend to spend more when making a purchase with credit rather than cash. The reason behind this phenomenon is multifaceted. Cash is a tangible asset, and spending it often evokes emotions and a sense of loss, unlike swiping a credit card and simply agreeing to numbers on a screen. Additionally, credit card use often includes a delay in payment, as well as the flexibility to pay off the amount later. This can lead to a false sense of financial security and a lack of impulse control when making purchases. Credit card rewards and benefits further fuel this problem, as they are designed to increase spending and make it easier to justify unnecessary purchases. This overspending can have dire consequences. In fact, according to recent statistics, 56% of Americans are unable to afford a $1,000 emergency, and only 40% of people in the United States have enough savings to cover unexpected expenses. It is important for consumers to be aware of these dangers and exercise caution when using credit cards to avoid falling into a cycle of debt and financial instability. According to recent research, more than half of the population in the United States would need to find alternative means of paying for unexpected expenses, such as car repairs or medical bills. This is because in today's economy, $1,000 is not a significant amount of money, and expenses such as car repairs or dental work can easily surpass this amount. Without the means to pay for these unexpected bills, many people are forced to turn to other options, such as charging the expense on credit cards and paying it off over time, even if it means incurring high interest rates. Others may try to reduce expenses elsewhere in their budget, borrow money from friends and family, or even take loan. This is particularly concerning as many Americans don't save any of their income. With the current high cost of living, it's not surprising that many people struggle to save money each month. High costs for everyday expenses, such as housing, transportation, and food, make it difficult for the average person to make ends meet. Additionally, many people do not view saving and investing as a priority, leading to a lack of savings that can cause problems later in life. This is a common problem that can become a huge financial burden in future, especially as people may have to deal with unexpected expenses such as illnesses or accidents that need to be covered by medical insurance or need to take loan. Not having a backup plan can be financially stressful and even lead to debt. It's important to have a savings plan in place and make saving and investing a priority to ensure financial stability and security in the long run. According to a recent survey by Schroeder, only 22% of Americans nearing retirement feel they have enough money to retire. This marks a decrease from 26% last year. There are several concerns regarding the financial aspect of retirement, and inflation is a major one. With the dollar not buying as much as it used to, expenses like housing and transportation have risen, and major market downturns can also lead to a significant loss of retirement savings. As a result, 69% of working Americans plan to continue working in some capacity during retirement, primarily to cover basic living expenses, but also to stay active and healthy. Furthermore, 40% of Americans plan to work until they die, which is not a pleasant thought for most people. This is due to a lack of confidence in their retirement savings, and it's not a scenario that should be taken lightly. The notion of having to rely on family members for support, or continuing to work until one is too sick to do so, is a worrying thought. While there were some benefits to working in retirement, such as staying active and having structure in one's life, it should not be seen as the only option. It's important to have a comprehensive savings plan in place and make saving for retirement a priority to avoid the scenario where working until the end of life is the only option. According to a recent study by Wallethub, the average household in the U.S. has nearly $10,000 in credit card debt. This is a concerning statistic, as credit card debt is considered one of the worst types of debt a person can have due to the high interest rates. This can make it extremely difficult to pay off completely, particularly when consumers overspend and only make minimum payments, creating a never-ending cycle of debt. Additionally, 44% of retirees reported that their expenses were higher than expected. This can be attributed to the common misconception that expenses will decrease once they retire, but in reality, lifestyle and bills may not change as much as expected, and costs such as leisure, travel, and health care may increase. This further highlights the importance of having a proper retirement plan in place to prepare for unexpected expenses. Furthermore, 37% of people haven't done any retirement planning, and it is considered one of the most difficult parts of retirement planning. Many people fail to plan due to lack of knowledge and intimidation by the large sum needed to retire comfortably. The truth is, having a plan for retirement is critical for success, and the earlier you start planning, the better. It's important to be aware of these statistics and take action by being responsible with spending, increasing income, and investing consistently and responsibly in order to avoid falling into the same trap. Proper planning and budgeting can help you avoid overspending, and it's important to keep in mind the potential increase in expenses during retirement. Additionally, increasing your income through means such as a side hustle or investing can help boost your retirement savings. Investing consistently and responsibly is also an important step towards achieving a comfortable retirement. It's important to start as early as possible, as even small investments made early can compound over time to make a significant difference in your retirement savings. You can also seek advice from financial professionals to understand the best investment options for you and make informed decisions. It's also important to keep in mind that retirement planning is not a one-time task. It's a continuous process that needs to be reviewed and updated as per your changing financial circumstances and goals. With these steps in mind, you can take control of your financial future and have the peace of mind that comes with having a comfortable retirement. Thanks for watching. If you have any questions or wanted to learn more about finance, leave a comment. And don't forget to subscribe to the channel for more simple finance tips. Let's work together to boost your budget and take control of your financial future.